Hello, Haley.
Hey, James.
Hi. I join early because my Zoom out here in Michigan doesn't always turn on in a timely fashion. I start early.
That's probably a good paradigm, especially in stock trading. Start early. Don't miss the opening bell.
Yeah.
How's trading for you?
Actually, I have an advisor that does all my stuff for me. I'm 82 years old. I was always worried about what would happen if I passed away. My wife doesn't care about any of this stuff. I had to have somebody to look over my. I started out with nothing 45 years ago. And the other day I had over $5 million. So I'm happy.
Very good job. The power of compounding.
I didn't know anything.
You're a testament to like Warren Buffett says about the cheat sheet. If you're able to compound over 40 something years in your, I assume you're in your 30s when you started investing,
Yeah.
yeah, you can have 5 million, which boggles some people's minds.
Yeah. Boggles my mind.
Where's your financial advisor?
Her name is Laura Sullivan. And right now she's with Morgan Stanley. She used to be with Chase, but she must have had a falling out and moved to Morgan Stanley.
I also have a financial advisor at Morgan Stanley.
Oh, no, she does everything. We sit around and talk about it. I love the things about TQQ. I'm a member of AI beginning when they published the magazine. So I was a lifetime member then. I read a few things there and you get some ideas.
So why
when the market goes down, it's probably a buying opportunity for a lot of people.
Maybe I would argue to see how the market closes tomorrow. Oh, so I've been wrong 3-4 times since July. It's been a V-shaped recovery every time. It bounces off, hits the 50-day, and it's just V-shaped. I would argue tomorrow's a little bit different because of certain market internals. But I'm a lot more conservative too, even though I run the growth stocks and leverage ETFs.
I'm glad you're doing it.
I'm happy to. It's actually improving my trading because it makes me focused on exactly what I need to talk about and what exactly are growth stocks, what exactly are leverage ETFs that I'm trading, and why am I trading them. I can't present on something that I don't care about. I have to present something that's important to me and I dial down what's important.
Yeah, good.
We're at the top of the hour. We have about 14 participants so far. I usually let people come on in. Is there anything else people like to talk about at the beginning of the hour? How's trading been? How you guys handled today? Is anyone in BE with that 18% daily drawdown? So I follow a few people online, like Tom McCallan, Alexander Trading, Jim Mobile, and everyone has been bombarding with reports this afternoon. I'm in Pacific time, so it's not evening. Everyone's been saying, I'm not too sure yet. One thing I did check was that we did hit a Hindenburg omen, which has a lot of false readings to preface it, but usually when I see an uptrending market and advanced decline kind of diverging from the price, that's when I get I'm a little hesitant. But there's been multiple advanced decline lines that's been diverging that has been corrected. So I have to constantly correct my theories since July. So I've been wrong for about 4 months now. Let's go ahead and get started at the top of the hour since we have Vibha coming in for 6 o'clock and I would like to give her as much time as possible. The disclaimer is the information presented is for educational and informational purposes only and should not be interpreted as investment advice, an endorsement, or a recommendation to buy, sell, or hold any specific securities. I am a volunteer and not paid for this presentation. Investing carries significant risks, including the possibility of substantial losses. You should conduct independent research, carefully consider your financial situation, and seek professional guidance before making investment decisions. Neither I nor any associate individuals accept any liability for any investment decisions made based on this information. Who am I? Yes, I'm young, but I have been investing for 20 years, ever since my parents gave me a stock trading account. I invested back in the 90s. I've held some gains for about over almost 10 years now. One of my longer holds is NVIDIA. I need to update that. I think I have more than 7,000% gain right now because of the current uptrend in price. And why I do this is because it helps me get focused and helps me bring people together about trading and helps me find my own blind spots. Here, how's my performance for the past year? In the beginning of the year, I didn't do that well. I had a slight about 5-10% drawdown. Later end of the year until about July, I gained about 60%. And now I'm about 43% and change invested. People always ask what I'm holding. I'm holding nothing, but I'm still watching the market. So we're up to about 26 participants. We're getting good flow of people coming in. I'm expecting probably about 50 people today. This is what we're going to talk about today. Feel free to chime in. I like having conversation. I don't like talking to the screen the whole time. So feel free to chime in anytime. So I did the welcome introduction. I'll give you guys the general market updates. I'll be giving some of the updated legs resources that I've been doing, leverage ETF and growth stocks. I'll give you my kind of my growth stocks on my watch list, what's been updated with the levered edge strategy, major events that you should be watching for the next month. Like today was a CPI report, I believe. And of course, we'll end the meeting with our guest speaker, Vibha Jha, who is a two-time US investing championship. Some of you guys have been with me for a while. You guys have been with me even before I was the meetup leader when Floyd was teaching. We have probably 50% new attendees. Floyd was instrumental in creating this meetup, and I'm continuing it. He's also instrumental to getting Vibha Jha today coming and present because he sent the introduction neighbor to Vibha, and Vibha told me, hey, I don't present to everyone. I get a lot of emails. She's a two-time investing championship, so she gets a lot of questions, and she declines quite a bit of them. So that's who Floyd is. And he's also the ones, I would say, that Vibha respects as a leverage ETF trader, as Vibha also trades leverage ETFs and growth stocks. So why am I giving a Floyd update? Floyd recently was working on his home. He fell off a ladder. Once he fell off the ladder, he had to go into emergency surgery. It was pretty darn bad. I've been talking to him for the past month, and he's finally out of the hospital after almost spending 3-4 weeks in the hospital. I would welcome the whole group to wish him a smooth and speedy recovery. He won't be joining us today, but his email is right here, qqinvestor@gmail.com. Send him a few words of gratitude and thanks and for a speedy recovery. We've been talking back and forth, and these are one of those life events, right? You fell off a ladder, you got surgery. Should I trade in the hospital? I've asked Floyd, hey, do you need a GoFundMe page? Do you need any funds? Dude, I make enough money from my leverage ETFs. I am good with my finances. I have a great healthcare. So I think he just needs some moral support from some of us. And also, when he was in the hospital, he was like, hey, my sons and my other people says I shouldn't trade. I'm like, Floyd, hey, dude, I 100% agree with them. You're in the hospital, you're on medication, please do not trade. And I'm not sure if he took that advice or not. I'm not sure if he took that advice, but I hope he did. And hopefully he's recovering nicely at home now. So, general market update. Today was a spectacular day in the most negative sense possible because this was one of those expectation breakers. IBD is at probably 40 to 60%. The Wu rating done by Steve Sweats is in the red. This bull market has been happening since almost April 22nd. So it's been going on for over 6 months. Some people have said this has been the best bull market for a very long time. And I would 100% agree with them. Invest in TQQQ, buy on the fall due day, invest it now, and you'll see you can have triple digit gains. Retirement account, regular trading account, doesn't matter. You should be making money hand over fist. And of course, I'm going to do some polls to see where everyone's at. We have 34 people now, which is great, to see where everyone's joining us from all over the world. You should see a poll on your screen at any given moment now. Did the poll launch for you guys?
Yeah, wait for me.
There it is. It's just a little slow on my end. Wow, we got 30 out of 33 people participating already. Awesome. 90%, that's an A in my book. So let's go ahead and end the poll and let's get the results. So there's most of us is coming from Pacific time. There's some few from Eastern, so we're coming from mainly Western. So we still have a speck of sun left for most of us here. And the second to last poll, because I don't like to doing too many, when I went to a lot of IBD meetups, we always like doing this because sometimes we're a leading indicator because we have our thumb on the market. Our portfolio account is, how do you say it? Our portfolio account is the leader's account. So I'm launching the poll right now. It should say, how much are people invested? Are you 0 to 20, 21 to 40, and so on? And I think it's the most interesting to see how we're invested. Do we have our guardrails up? Do we have our stop losses? Can we make sure that the gains we've had for the past months are doing well? Maybe you guys bought even earlier than a fall through day, but we'll see. So just to have preview, we look like a standardized bell curve. Nice. We have about 28 participants. Good enough. I'm going to go ahead and end the poll right here. I'm going to share the results. So I'm part of the 0 to 20%. It seems like no one is on margin anymore, which is great to hear. For people who are 81 to 100% invested, care to unmute and just give me perspective on your portfolio, the market, your opinion on things? Moving on. How about the 60 to 80, 61 to 80% group? How are you guys feeling about it? Sure. We have a little bit of quieter crowd tonight. That's okay. So
This is Vibha. I definitely have cut back my TQQQ, which I'll talk about when we get to that part of the presentation. For my individual stocks like Palantir or Robinhood, they're still holding the longer term moving averages in terms of the 10-week, which I look for, and I have a profit cushion. Overall, even though we're at an ugly part of the market or a time in the market, we've had a lot of strength since April. And so it's not going to go straight up. So my view when we have times like what we're going through right now is I do look at the weekly and the monthly charts as well. And we're still seeing overall higher highs and higher lows. So from my perspective, if it's a strong growth stock that has great fundamentals and they are pulling back along with the rest of the market after a strong run, then I'm going to give them a little bit of room before I exit completely.
any thoughts? Anyone? Thank you.
Hey, Helly, I'm one of the other folks who said 0 to 20. I exited October 10th when the last major correction happened. And when I look at the market after that, it's been so volatile. It would be hard for me to actually enter into any swing positions and hold on to them because the market has been just going crazy. And all the major, except AMD, and almost every other major company stock has actually had a decline. And I'm glad that I'm out. When I look at it, it's just been too volatile. I think there's probably needs to be a bigger washout or correction. And then we probably will rally into Christmas or New Year's.
Remind me again, what do you trade? Growth stocks, leverage ETFs?
Growth stocks, I'm looking into investing in leverage ETFs. I also wanted to keep my gains of this year. I didn't want to give it back until the market shows me that there's low risk entries available. I'm going to stay away. I need to have low risk entries.
Thank you,
Not just
Vasi.
like that.
So basically, if you look at a weekly chart on the S&P 500, since
Mhm.
April, we've been above all the moving averages, the 10 to 20 to 50, and we haven't even touched the 10 even to now. So to me, it's like, even the 10, to me, it's not a big deal. I'll at least get to the 20 to slightly get me worried, and 50 is really a big deal. But at least for all the bears out there, at least get me to the 10 to show me there's some kind of cloud out there. But I don't see anything. And that could happen next Friday, it could happen in a year, it could happen in a month, whatever, but at least let me get there to at least say there's somewhat of a problem. Even this week, with the big downs that we had, S&P is up 5 points for the week. So that kind of summarizes what's going on.
That's beautiful. My next slide was literally the S&P 500. So I was like, that red line on the screen right now, that's the S&P. That's a 10-week moving average for me.
We're about there.
Yes, we're just about there. And you can see since the fall through favor, every time we got in close, we just went off. So we'll see what happens. That's why tomorrow I think it's going to be telling. Are we going to close below the 10-week moving average? Are we going to touch it, then bounce off? Are we going to touch it and then head down? We try not to let our emotions get in the way and let the market tell us how to trade. Any other comments about the general market conditions?
If you look at the NASDAQ, we bounced off 15-day today. And there was a buying opportunity midday today.
Hey, guess what? I have the next chart. It was NASDAQ. How'd you know? I feel like I'm just tipping people in. Hey, can you lead into the next chart for me? No.
I follow NASDAQ. Actually, I know JC from somewhere else, but he's an S&P guy. I'm a NASDAQ guy. I trade the TQQQ, and I bought it Friday afternoon, sold it Monday at a nice gain. And I thought there was another buying opportunity midday today at 104. And we should get some upside tomorrow because we've been down like 3 days in a row. And the market generally doesn't go the same direction 3 or 4 days in a row. So it may not finish that way, but we should get a move to the upside. And if you look at the futures, we're up 46 points right now on the NASDAQ. So not a huge move up, but we got 50 points and pick up 2.5%. And it's the scalping strategy that works quite well. Try and do it only once a week. This like the second time this week, which is a little quick, but I think there's a small opportunity. But
Anyone
I
want to
think
take
there's going to be more downside. So we'll see.
5%? I think is the reason. I just saw General Pool's video. A typical market goes down. There's a bear market in the typical stock NASDAQ does go down 14% in a given year. So maybe this is defining the 14% correction during the year, but we had this crazy beginning.
It was a few weeks ago in an IBD's paper on the bottom. They had a little blurb about that, which was new to me, but I thought that was interesting. That said that if you got like a good 20% correction earlier in the year, generally for the rest of the year, you don't get more than 5 or 10 at the most. So after I got that a few weeks ago, I'm like, oh, I'll just hang on and see what happens. And I'm hanging on. I'm one of the 80 to 100s. I'm pretty much fully in.
How's your performance this year?
I got several accounts. The accounts that trade the leverage products in are up. They were up like 35% for 3 trades.
Beautiful.
The stock account, a trade account, with just stocks, it's up. I know it passed 20% last quarter. I don't know exactly where it is now. I usually do them at the end of the quarter and see where I'm falling and make sure I'm doing good. But I figure for my age and what I'm doing, if I hit 20% a year, we're good.
Any age, if you hit 20% a year, you're doing very good.
You know, I'm 63 now, so we're looking at the end of the line.
I bet everyone can guess what's the next stock going to be. We went through S&P 500, went through NASDAQ. Anyone want to take a guess?
You look at the Dow?
Not the Dow.
NVIDIA.
Russell, Palantir.
Russell. We're not going to individual stocks yet. How has Russell been doing? As we know, Russell's always been lagging a little bit. Here's the previous high, draw a straight line around 2,500, and just fighting it. I always like to see in every single market, everyone leading the charge. What has frustrated me about the small caps is that Russell has not been leading the charge. The big names with the AI money has been throwing money into the market and been leading the charge. So that's something I've been always cautious about. And that's why I'm breaking my own rules and sold in July and haven't got back in. So how's the market internals? I alluded to this. How are the market internals? This is what I watch. Everyone watches a little bit different. People can watch overbought, oversold, can watch VIX. This is what I feel like it's the leading market indicator that has worked for me in the past 10 years. And remember, 10 years means 2020, 2015. I think that's what has not happened in 2015. Multi-year bear markets. I haven't really experienced that. I haven't experienced COVID crashes, but not multi-year down markets yet. I was the long-term holder. So how's the S&P 500 price? How's the NYSE advanced decline line? It's not really going up. It maybe goes up a little bit. I have to squint my eyes, but it is going down ever so slightly. There was a decline before it took out the previous high, so that negates the point. So how about Hindenburg omens, right? How's the new highs and new lows? When new highs and new lows goes up, I have concern, and the market's going up. That means the market internals are really breaking down, meaning there's actually stocks that you're losing more and more money, and just other stocks just making more and more money. And this is no market cap. There's just new highs, new lows. And I like to smooth out with 10 days moving average instead of just daily because it just gets ugly. How's IBD? Sorry, this is a little old, but this was 60 to 80. I took this yesterday with 3 on NASDAQ and 6 on S&P 500. If I'm correct, I think this can be 4 and maybe 7 because I think a distribution day fell off today too. But we can check after.
Yeah, it's 4 and 6, and exposure is 40 to 60%.
Thank you, Matt.
I updated just before I got.
Yeah, I was like, I'm right at that time where they update. It's around 5 p.m. I'm like, I'm not going to try to juggle this. I'll just have one day old data, which sometimes changes everything in the market. So people always ask me, what are you watching? What do you care about? Here's what I'm watching. How do I get it? So I love this guy, Harry Schrebel. He's the guy who I met at the joint IBD meetup in San Francisco, which was the last one because IBD no longer supports meetups. He says, the only thing that matters is price. Volume does not matter. I'm like, why doesn't volume matter? Because there's like dark pools and stuff like that. And another IBD trader, Mike Webster, whom I deeply respect, I went and talked to him about it. It's like, yeah, I don't look at volume anymore. It's just a bunch of noise. I'm like, wait, what? But William O'Neill says is price and volume is confirmation. It's because of dark pools and ways to hide and add data that the data is so noisy. Is there a rule of thumb? I've searched for a few days and I couldn't find any. So right now I give volume instead of 50-50 as confirmation. I give volume a little bit less so I can actually pick certain stocks on my innovators list that I can pick. And of course, Jim Merple, highly conservative, he hedges his stocks and he's O'Neill disciple. I use my own customized screens of IPOs, Mark Smith Groves 50, and pure news because news does matter. I respect people like Stanley Druckenmiller, who uses a lot of news-driven stuff, and he's made 20% gains, which is absolutely amazing. So what is my buy ready list? That's me. Stocks are in about bases. So in about bases, it's meaning it's like it's not going crazy down, meaning there's a 20-30% uptrend in the stable sideways. Once it goes stable sideways, I want to see it go back up. So up, sideways, and up even more. And my innovators list. What does that mean? Innovators means it's companies I really believe about. It's companies that I have high conviction about. It's companies that people have lost their life savings in and also made their life savings in. Of course, you guys can't think about, I'm talking about Tesla, right? Tesla, it's like some people have made a lot of money. Some people have lost a lot of money on it. You're short, you're long, you can lose and make money in both ways. So before the presentation, there's always stocks on people's minds. Is there any stocks that people want to talk about that want the whole community to chime in if they're holding, if they're not holding? And I'll pull up my market search for this. Here, one moment. There we go.
I want to say something about the market. Can I?
Hey, Gilbert.
Hi. This year is strange. The market is up since April, but after the sell in May go away, it didn't happen this year.
It's all May and stay.
October 10, and that's a big drop. I think the character has changed. I don't expect any year-end rally, that kind of thing. Especially the company making money, a lot of money. And the next thing is drop, not small amount. It's pretty big drop. To me, I just want to hold on the game for this year. And another thing is one day the IBB Live, they talk about the TQQQ and then 0-day option and that kind of thing. David Ryan and Mike Webster saying if those things start running for the exit door, try to get out, that could be a ugly day. So I try to hold on my gain this year. I have 56% this year gain. I'm happy. So I just look at the market, make sure I don't do a turnaround, round trip. So that's all I say. So thank you.
Please do not round trip. That is like the most heart-wrenching thing. I remember there was a year I had triple-digit gains and I thought I was the stock market genius. Then I didn't do a round trip. I ended up with 20% gains. I was like, why did I go on margin so bad? I lost so much gains. And it took me longer to lose it than for me to gain it. And I was like, oh, it had so many portfolio stops that it kept on selling 3 times. I was like, just stop trading for the year and you're done and just come back next year because the stock market will still be there. Okay, so let me go to the chat. Someone asked for CoreWeave. CoreWeave used to be one of my darlings. I love IPOs. You see the little green line I drew. It did phenomenal. I put a trend line. I wanted to buy some more, but it just didn't have the right price action according to the market. Because in April, as we all know, the follow-through day, it just went straight up. So if CoreWeave was a leader to me, it would have kept it going straight up, especially with AI in its name. On the weekly, we just look at it. It's just so volatile right now that I needed to form a base before I would invest in it. Does anyone want to give some extra color to CoreWeave?
Clearly, I think there's a lot of insider selling that's probably affecting the price.
And wait until they start making money. If sales are growing huge, but until they go positive with earnings, because figure 2 quarters of positive earnings would be a good buy point. It'll be all over the place from the chart until that point.
That's a very traditional Bill O'Neill.
I've been studying
but
for
they
a
don't
long
make money.
time. I did a study on IPOs a while ago, and they all do exactly what this one's doing. If you look at that daily, they open up and you hit that right buy point where it crossed up. They come up and they come out and they go up a tremendous amount. Should have been selling up there. And then they all come back and then maybe build a base. But until they get some positive earnings, they could come down and stay down there forever.
I would agree. I think Ropo one time said, like, really pay attention to earnings in the down market. And when one of my friends was talking to him at another conference, at the IBD Masters conference, when they hosted the last one. Oops, sorry. I skipped Bossie's AMD. Let's look at AMD. Phenomenal. Going up. How's sales? How's earnings? Great. How's institution? Contra fund is offloading just a tiny bit. Don't know what he's doing. Daily chart. I always hate this on earnings gap up days. Why does it close so down? But what it might have just been a shakeout. It's going up. It's going well. Negative 4% on today's happening. Not too bad. I did say volume does matter from Harry Siebel and Mike Webster, but I'll still look at volume. It's a habit that I've done for years. Volume looks fine. AMD still looks intact. I mean, if you're really bullish on the market, you could try to take, once it takes off the high, maybe.
I'm just trying to find the chat box.
Oh, okay.
I didn't realize I was drawing something.
I
Sorry.
didn't realize I left the drawing on, which is amazing. That means anyone could draw on the charts I'm presenting.
It looks that way.
That's a happy, as I think it's a happy accident.
One question on AMD.
Yes.
The only thing I want to point out for AMD is it might also try to fill the gap. Worst case scenario.
Kunal, what you were saying?
Yeah, my worry is also that. Like, where would you sell this to avoid getting stuck with it?
Where would be my expectation breaker? Let's say you bought it on earnings day. What's your expectation? It depends how long this is going to go. I have a sell signal that if the entire market starts going to shit, excuse my language, if the entire market goes down, I pretty much just sell my whole portfolio. Because what ends up happening is that if I get shaken out too much psychologically, it's hard for me to get back in. But if I was looking at bars, I usually just give it if I want to have a super tight stop loss and I have gains from 220 to 240, about 10%, I might have it on the low of this bar. So if it ever breaks out 234, and that's assuming you're a trader too, you're not a long time holder. If I'm just trading this and to see if this is a quick little dip instead of a long dip, I'll just sell the low of 2 bars behind, because this is just the volume in these two, it's pretty significant. But let's say it keeps on going here, goes up and down and just consolidates, then maybe I'll give it even to the low of this bar or maybe 10% lower, because I have a little cushion over here. But I don't like playing that because that might be a long time. Anyone else want to give color on where they would sell AMD?
Something I would look at on the left side of the chart is that previous high.
Hey, Branka, I know that voice.
Good to see you. There's this previous high of 227.30 to the left, March 24. And it coincides. I like it when there's previous resistance that has now shown to be the support level.
It's going to be a very long line.
Yeah, and like I see things like that on the weekly chart and draw these long horizontal lines on the weekly charts. I have no position in this one, but that is what I would look at.
I'm just drawing the lines for everyone to see. We're over there, Kunal. Cool.
Okay.
And we have LLY. How are we doing on time? Pretty well on time. Eli Lilly. We have a lot of funds own it. It should be on one of the innovators, if not Brian Ready list, because they recently made an obesity drug. Now, as we all know, the Western diet tends to lead to obesity, and they've actually been making money on this. So I'm quite excited for them. The health sector has done really well today. I think it's XOM. Nope, I forget. The healthcare sector was not taken out of it. So 2 sectors that I looked at was energy and health. Those 2 sectors today showed resilience and strength compared to the overall market. So in a bear market, when sectors are showing high resilience, that's when I'm like, okay, I'm going to start getting bullish on these sectors. I look at general market conditions, sector conditions, then you buy the best in the best market, best in the sector market, and buy the best stocks in that sector. And that's how you get the highest performing growth stocks. So Eli Lilly hits the previous high. Let's take a look at the daily. It's actually starting to make a higher high. There's a change of character that happened right at the beginning of November, end of October. We're seeing 11 out of 13 days high, and we have 3 red bars or 12 out of 15. when we have that kind of strength and we have the ants indicator, e-liability is showing phenomenal strength with phenomenal institutional ownership. This is one of the stocks that might be leading the charge if we enter a bull market. The earnings line is also going up like crazy. The sectors line, phenomenal. I absolutely love LOY right now. I'll make to answer your question. Vibha is presenting at about 6 p.m., so about 20 minutes. So didn't miss anything. So Figure Tech Solutions, I remember this IPO. It is hard. With IPO, there's so much volatility. I only look at the daily stocks. Matt, did you want to chime in since you also seemed like the IPOs too?
I wouldn't be touching it anytime soon.
I would agree with
It
that.
looks lousy.
There's nothing. It might have done something that broke out past $50 right here and just kept going up, down, be like, ooh, that's interesting. But I might have bought here just to sell in like at a 7% stop loss or 5% stop loss, and I was keeping it tight.
Yeah.
It's just
IPOs, you really want to give it like 10% because you're still looking at the charts. They move back and forth a lot more. IBD is normally 7 or 8, but you really want to go with 10. It's so volatile. You got to give it that little bit of room. But yeah, this one doesn't look too good. What do we do?
I asked about it, Haley, because it had earnings this afternoon. I think it's the market that's messing it up.
Mhm.
I think the sales and earnings numbers are very nice for an IPO at this stage. If the market was good, I think the chart would look different. It's a new stock overreacting to all these swings we've had recently. I've had it on my watch list for a while. In a good market, I think I would be in it or try to get in it.
So one thing that's been bothering me about IPOs is my IPO breakouts watch list. I track every IPO that has significant dollar volume trading. And when I look through it, nothing is like yummy. There's nothing I would even take a bite at. And also a lot of stuff is, I feel like it's overseas. It feels like SPAC, but for like international markets almost. Blank check, whatever. Offer AI, Navan. Even with AI names, it wasn't that many that was going on. Charming Medical, Hong Kong-based traditional Chinese medicine, great by culture. So Tech Rate Group, there wasn't too many. Even the Darling that came out, I think it was like just had a terrible, even though I know like almost every single friend and every single person using it, I'm like, I think George presented on this too. Awesome earnings, awesome sales. It's making a ton of money. You see the earnings and sales. It just took a dump. Yes, the IPO price is $33, so we haven't reached that. I thought it might have been the next Google IPO, but it just didn't come to fruition. It just fizzled so far. But it's still on my innovators watch list because it's a great company. Collaboration is great. I've used it for some of my businesses on the side. Any more stocks before moving on? We have probably enough time for one last one. And Tempest AI. Earnings are growing, but still negative. So always watch out for that. That can always be forged a little bit. Let's look at ownership. Wow, T Rowe price is actually going in a bit. Just needs a base, in my opinion. It's the latest and greatest thing. It just needs a little bit of base. 200-day moving average. Stocks is going down. Let's see if it holds. But with this amount of like volatility that's coming in, that's going up and down, there's probably better picks out there. Okay. So let's go back to the presentation. Now let's go back to the leverage edge strategy update. This is a creation between Floyd and Gary Taylor, and they combine their thought process. Now Gary Taylor has taken over because he did all the programming behind it to make it more automated, to track a bunch of leverage ETFs. What has he done? How has he done? I think it's performed at a near triple-digit performance rate, and he's been trading in and out of it. Bring up the website. The leverage edge strategy has done 99.8% return year to date, and buy and hold has done about 40.3%. So it outperformed buy and hold by about 59.5%. And this data is as of October 31st, 2025. And these are all the buy and hold that this has done since the beginning of the year. And this is literally his indicator. You have buy alerts, not automated, but buy alerts and sell alerts every single time it goes up and down. So it's done very well on the TQQQ. These are all the indexes he's tracked. If you guys have been playing gold leverage ETF has taken a slap on both cheeks. It's been hurting quite a bit lately, especially after its most recent run up. I always like checking the highest growth ETF right now. One of them is Soxel, FANGU, TECL, SPXL, Bulls, a lot of tech stocks. At one point, it was the home builders and supplies at nail, but not anymore. Month to date, negative 16%. It hurts. This is my customized trading charts. You need the leverage edge strategy on the bottom to really tell you where's the buy, where's the hold. And you see all these sell and buy signals. Pretty much, I was checking, I didn't have time. I wanted to check with Gary that a sell signal didn't hit today because both of the fast movers are going down. I like using this to keep track of all the leverage ETFs. I would like telling people, if you're not aware of it, the news do affect the market. So I have way too much events. I'd rather have more events than less events because we all know that interest rate cuts will definitely affect the market. We know what Trump says will affect the market, but there's no planned Trump comments ever. Like, how do you know that Trump signing the government shutdown today will actually have a negative, doesn't have enough of a positive effect on the market to reverse what happened in the market? Who knows? By 10 years from now, we won't even remember. I'm also going to share the Google Calendar link so everyone can add it to your own Google Calendar if you use that software. Last time, I was talking about my trading view, leverage sectors, and leverage ETFs. I think I finally got it right. There's a lot of leverage ETFs. There's a lot of leverage single stock ETFs. Like if you want to do double Apple, double Tesla, and things of that nature. So I finally put it up and I'll show you guys what it looks like. Leverage sectors. So we have the bulls, the Soxels, consumer discretionary. I did it by sectors. We have energy, as you can see, 5% change today. Information technology. Let's just look on the right. We can see what has been doing well. As I mentioned, energy has been doing pretty well. Healthcare has been doing pretty well. We would look at technology. There's over 10% on the sectors. We look at the US indexes. It just took a massive beating. And this is, of course, my favorite, Russell and Russell. We can also do international markets, the MSCIs, the Europes, the Koreans, Mexican, the yin and the yang, which means the yin is the bull market, the yang, the bear market, and it's 3x leverage on China. I thought whoever made this was hilarious when they did that. And of course, GDXU, real estate. I do have one on the crypto industry. If you want to leverage up on crypto, I was like, heck yeah, why not? Single stocks, more than I ever want to talk about. But it actually makes sense. Palantir, Adobe, Riot, all of these single stock leverage ETFs, because we do have retirement accounts, right? We've probably been investing in them for decades. If you are really bullish on Eli Lilly, hey, it actually made a 0.79% on a 2x long LOI. There's even Rocket Labs for industrials. I don't think there's any utilities. I've also made 2 additions to this: quantum computing and crypto. So I think quantum computing might be the new AI in the future. I personally did 2 separate sectors and you can access it all from these 2 links. Pretty much just email me, join the Google, and I'll give you the presentation slides on all the links. So that's the easiest way. I'm also doing a small website. So you have the Google Groups, the YouTube channel with all the videos, you have the overview and stuff like that. It's just a small web page to host every single detail to organize things a bit. There's so much chaos. And it's nice when things look pretty and it's easy to click. And back to the slides. So, yep, email, join the group. It's meetup.com/stocks. I can't believe the name wasn't taken stocks, right? But sure, I'll take it. So easy to remember. And Google Groups, and my email is haleyinsights@gmail.com. We do have our guest speaker, Vibha Jha. I'll do a small introduction and I have her slides ready waiting for her. So Vibha Jha is a 2x US investing championship. And how she came to this is that she experienced a 70% loss during the .com crash. And Vibha built her investing approach from the ground up, guided by her discipline, study, and her self-reflection. What did this result in? This resulting her in triple-digit percentage gains, 155% in 2020, 100% in 2021, 70% in 2023. And here's the caveat. People ask, oh my gosh, she must have used margin or something. She did this all in her retirement account. So let's give a round of applause and Vibha Jha on.
Hello, everybody. Thank you for having me. The last time I was here was in April of 2024, so it's been 18 months. What I thought I would do today is give a brief overview of my strategy. I've done interviews and podcasts over the past year with Justin Nielsen, with David Keller, so I've gone into my approach a little bit. And I am also creating a masterclass at Trader Lion's request, specifically focused on TQQQ, where I'm going to do 2 webinars. They'll be live, but they'll also be available as recording. And the focus of the first one will be the science of trading TQQQ, and the second one will be more of the art. What I realized in a lot of the interviews and the conversations I've had with people is that bits and pieces of what I say get taken for sound bites, and it's not necessarily reflecting the whole picture. And part of the whole picture also is my own personal, I'm retired. I quit my job in 2013. I live off my money. I'm very close to my family. I do a lot of things with my family. So there's certain times of year where I know I'm not going to be focused on the market. I make sell decisions just based on that. There's no technical reason why I'm selling other than for the next 4, this is a good time of year for me right now. The next 4 to 6 weeks, I'm not going to be very focused on what's happening on a day-to-day basis in the market. So I do think it's important for people to have all of that context. I'm going to go into that a little bit more when I do the masterclass. But what I thought I would do today is just do a high-level overview of the strategy, talk about some of my sell signals that I've refined a bit over the last 18 months. I'm continuing to work on some of them. Haley, you sent me a very long list of questions a couple hours ago, right before the meeting. I printed them and I was scrambling to put dates on certain things. I apologize if I'm a little bit all over the place, but I want to make sure I get to the questions, because when I have done the podcast and the interviews, it's typically just me with whoever is doing the interview. There's not that much opportunity for people to ask questions or get clarification. I would really like this to be interactive. I'll spend a few minutes on the few slides that I have, but I would really like this to be helpful to you all, for me to try to answer your questions. And again, I will share what I have done that has worked for me, which is maybe very different from what may work for other people. So just take what I say with that perspective and take anything that works for you. If it's very different from what works for you, then don't use it. Okay, so I think you can go to the next slide, Haley. Thank you. This is really the core components of my TQQQ strategy. I use this in a couple of different ways. So are you able to see the slide? Okay. The first way I use it is to try to get into the market after we've had a bigger correction. So I define a bigger correction of something that's at least 10%. And as you were talking about before, Jim Ropel and then others have also said, Eric Krull has done a lot of analysis. He was on Investing with IBD with Justin Nielsen, that we do get a lot of these pullbacks throughout the year. I look for the bigger ones that initiate a position in TQQQ, because my intention is to not constantly go in and out. My intention is to get in after a deeper correction and stay in as long as I can. So I use it both as a source of funds, meaning that once we have a follow-through day after a deeper correction, but I'm still easing into individual stocks, then instead of just sitting in cash, I will put the money I want to invest into TQQQ and then start selling down as I find individual stocks to buy. In recent times, like over the last 2 years, I've also started to use TQQQ as a core position, especially after a deeper correction. The reason that I started to use it as a core position is because when I would do my post-analysis, I found that TQQQ was outperforming the majority of my growth stocks. And I've said this in other conversations with people before. I think that's really being driven by the success of what used to be the FANG stocks. Now it's the Magnificent Seven. So they're having a tremendous impact on this. And just because that's been happening in the past doesn't mean it will necessarily continue going forward. But when I looked at the growth stocks that met a lot of my criteria, many of them were in the Qs. TQQQ gave me an opportunity to be in them without using margin and still boost my returns. So that's why I use it as a core position. I generally wait for a follow-through day as defined by IBD before I build a full position, especially after a deeper market correction. And the reason for that is that in retrospect, when you look at charts, it looks obvious that this was the bottom. When you're actually going through a 10%, 15%, 20% correction, you really don't know that it's the bottom. when we're in that situation where we're still trying to find a bottom, I am more conservative about when I get in. That's why I try to wait for a follow through day. Sometimes I do enter earlier with a pilot position if I see 3 days of higher highs, higher lows. I do that if there's other supporting action, if there's strong closes in the upper half of the range, if it retakes some of the key moving averages. Typically, when there's day one of a rally, right, the follow through day typically happens in days 4 through 10. But if I see 3 strong up days, even though there's not technically a follow through day, I may still enter a pilot position and then go in with the rest of my position once we have an official follow through day. I maintain a core position as long as the broader market, meaning the NASDAQ and the S&P, although I also pay more attention to the NASDAQ than the S&P just because of the impact of the Qs, as long as the broader market is in an overall uptrend. And like my definition of that is if you're looking at it over several weeks or several months, you're seeing on the chart consistently higher highs and higher lows. So as long as we're in that type of a situation, I define that as being in an overall uptrend, even though you have the shorter term intermediate pullbacks. So that's the first way that I use TQQQ. The second thing is I put swing trade in quotes because as I've been talking to so many people, particularly those that truly are swing traders, when they swing trade, they're in and out in a matter of days, 1 day, 2 days, 3 days. So for me, because I'm somebody who I've held NVIDIA since 2010, sold a lot on the way up. I have several stocks I've held for a couple of years. I sell on the way up, but then I maintain a position. So for me, anything where I'm holding something for less than 12 to 18 months, that's a shorter term trade. So that's why I put swing trade in quotes. The shorter term consolidations, I wait for market pullbacks. When I say market, I'm talking about the NASDAQ composite or S&P. Again, typically I will, if there's a divergence, I look at the NASDAQ as my main thing. But I wait for pullbacks of at least 5% to 8% before I start looking to get back in. And the reason that I wait for 5% to 8% is like in 2020 and 2021, those were the years that I had the triple digit gains. And I was in a lot of individual stocks, including a lot of IPOs, especially in 2021. What I also noticed about TQQQ is that there were multiple times in 2021 that there were at least 3 times where TQQQ pulled back over 20%. And then within 4 to 5 weeks, it would be back up to its highs. I thought, okay, I would like to take advantage of this. Again, this is triple leverage. When the market is pulling back 5% to 8%, typically those are the times when TQQQ comes down at least 15%. If you're able to get in around those times, then within 4 to 6 weeks, I'm able to make a gain of 20 to 25%. That's why I wait for 5% to 8% corrections. People can get in. They don't have to wait that long, but I try to get in after a more meaningful pullback rather than just the 3%, 4% ones that happen multiple times throughout the year. Okay, so this next slide, I go into a little bit of how I'd refine my TQQQ sell signals. When the information I shared in April, I'm updating you to let you know now what I'm doing that's a little bit different. So the first thing is that when I initially presented in April, I talked about selling incrementally into strength. Once it reaches a new 52-week high, oftentimes it's going to keep going even higher than that. So I would sell maybe after the first 52-week high, but then I was waiting. I didn't want to keep selling every time it made a new high. So now after a new 52-week high, I actually wait for a downside reversal before I start taking that as a sell signal. I also, when it hits resistance near recent highs and it's rejected 3 times. Sorry, does somebody have a question? Okay. When it hits resistance near recent highs and it's rejected 3 times. So that has not been happening recently. That tends to happen more when we're like in choppier markets or when we're actually in markets where maybe overall things are peaking and it's going to start to roll over. We haven't really hit that recently over the last several months. Another signal that has become very important to me is when it's extended from the 21 exponential moving average or the 50-day simple moving average. When I did an analysis over the last couple of years, many times when it is extended around 10% or more from the 21 EMA or 20% or more from the 50 simple moving average, a lot of times the TQQQ does start to pull back. A recent example of this is the most recent sell that I did of my TQQQ was on October 28th. On October 28th, and that was the third gap up in a row. We were 11.6% extended from the 21 EMA, 19% extended from the 50 simple moving average. I had sold 25% of my position up at that point. I initially sold 10% of my position on July 31st when we had a downside reversal. And typically in August, I tend to see drawdowns in my portfolio. So I was getting a little bit ahead of that because of the big gains that had happened since April. The next tranche I sold was 96.32 that day. So I didn't sell at the 96.32, but at the close of that day, when we had stalling day, and then again, it closed near the bottom of the range on higher volume. So I sold 15% of my position on that 96.32 day. After that, I was just watching and waiting because I had already sold 25% of my position when we got to October 28th. So you can see that if you look to the left of the chart, October 28th and a couple of days before that, look at all of these gap ups. If you look at the 21 EMA and the 50-day simple moving average, it was starting to really get extended. Similar to what some people mentioned in today's meeting, I also have had good gains because I got in April 22nd. I didn't want to give all that up. So my feeling was, okay, I did sell some around that 96 level, and then earlier I sold some on July 31st. But once we started to see this extension, I thought it is going to pull back. So I want to lock in my gains. So I sold 25% of my position on that October 28th day. Basically, I'm at just 50% of what my target position is for TQQQ. So I'm 50% in cash for my TQQQ and 50% in TQQQ in terms of the position that I typically hold. Okay, so I think you can go back to the other sell signals. And then bulls versus bears when they're over 60%. Typically, if this happens in conjunction with it being extended, that's another indicator I look at. But what I've realized is it's really the extension that is the bigger driver. And oftentimes when it's extended, the bulls versus bears may also be at 60% or close to it. For example, last week, I think it was at 59%. But really the extension from the 21 and the 50-day are probably the most important rules that I use right now, especially after having a good gain. And then 3 consecutive down days and rising volume. That's a bigger indicator when you look to the left of the chart, and typically there haven't been 3 down days in a row, where typically there's only been 2 days when we're in a strong market. When you start to see 3 down days and rising volume, then maybe that's an indication that the market may be turning. So I look at that as a sell signal. These aren't actually sell rules. I think that's a distinction that somebody had asked me about previously. These are sell signals because when these start to happen, I don't necessarily sell everything because one thing happens, or even sell anything after one thing happens. I'm really starting to look for if many things are starting to happen together. That's when I start selling. The only real sell rule that I have, like a true sell rule, is when I get in initially. So my sell rule when I get in initially is if it if it closes below the low of the follow-through day, then I exit. Or if it closes below the low of the rally day, then I will exit the rest of my position. Whether I do it all below the follow-through day or just partial below the follow-through day depends on how much room there is between the day the rally started and the close of the follow-through day. This year, when you go back and look at the V-shaped recovery, the day one of the rally was the day when it hit the low of 35. So TQQQ. So if the $35 low, which is in April, exactly right there. So that was day one of the rally, but the actual follow-through day happened much later. It happened on April 22nd. If it had closed below the low of April 22nd, which was the follow-through day, I would have exited my entire position instead of waiting for it to close below that 35 low. There was just too much of a gap between that 35 and the levels of the follow-through day. But in a non-V-shaped recovery, under like the normal times when we have a correction and follow-through days, there typically is not that much of a variance between that low of the rally day and the low of the follow through day. In that situation, I sell in tranches instead of getting out of the whole thing. Okay. The ones that I'm still working on are the distribution days. Originally, when I had come up with the 4 to 5 distribution days, it was when IBD used to have the uptrend, market under pressure, and then market in correction. And oftentimes, by the time they called the market in correction, it was already sometimes within a few days of the bottom in a typical year, not like the really bad crashes. So when I saw 4 to 5 distribution days, which would be around the time they would declare under pressure, that's when I started taking some gains into strength. But now, because they've changed how they define things, I do still look at volume because I'm also still a Bill O'Neill disciple, but I do understand where Mike Webster and other people are coming from in that there are a lot of things now that go into volume that maybe weren't there when Bill O'Neill wrote his book, some of which are the dark pools and some of the other things you guys have talked about. But I also think some of it is really, there's so many retail investors now, there's no commissions, there's just a lot more volatility. And sometimes with option days, things can go up and down that aren't necessarily saying that there's a broader change in the trend. Rather than just looking at the number of distribution days, I do look at if a cluster of them happen within a short period of time. So for example, within the last 2 weeks, we've had 3 distribution days on the NASDAQ. So that's something that definitely is a concern. And if I had not sold down to half of my position on October 28th, I do still have good gains from April 22nd. My next line in the sand is going to be looking at what happens around the 50-day moving average and the 10-week moving average. So I have not re-entered anything that I've sold, but I'm still trying to hold it. As you look at the weekly chart, it doesn't look great, but it really doesn't look bad. It looks like a typical pullback that happens after many strong weeks that we've had. In terms of the things I eliminated, before I used to look at new highs and declining volume. I found that really was not that relevant. What was more relevant is if we had a downside reversal after making new highs. I used to look at closes below the 10-day simple moving average and rising volume. What I realized is most of the time when it closed below the 10-day, it also closed below the 21. So I started to really focus more on the 21 and the 50 rather than the 10. And then the final thing I eliminated was a poor close below the 10-week moving average because that feels like a late signal to me, particularly when you're looking at shorter term consolidations. By the time it closes below the 10-week moving average, sometimes it's nearing the bottom of the base. If I'm trying to really sell into strength or get defensive while there's still strong gains, I don't want to wait for it to go down that low. I want to really focus on the 21 EMA or extensions from that, like on the way up. So that's it for the questions. I don't know, Haley, if you want to facilitate or if you want me to. I wrote a bunch of notes because I was hurrying to look through and see if there was anything where I had to look up dates, but I'm happy to take the questions in whatever format you would like, and I'll do my best to answer them.
So I'll be a facilitator. There's some chat questions. There's some questions that are in the emails. So I put it into a few broad categories. So you talked about the recent trades, signals. You talked about managing your TQQ, position sizing, and you've even touched upon your other stocks, what you've done since April. I really appreciate that. And also to make things easier for you, you just take a picture of your paper. I'll type it all up and send the notes to people if you would like.
It's not really like you would need me to translate them. It's more just that if I needed to look up a date, the dates that I shared with you right now, like the 7/31, the 8/13, I knew approximately when I did it, but I didn't know the exact date. So I had to go back and look at the chart to look up the actual date. I think I would rather just answer whatever questions as they come up so I can clarify, because this is really more just my things to remind me of what I did.
Okay, so we'll start. Do you ever trade TQQ in pre-market or after-market hours?
Think sometimes it's mainly because of the liquidity if I'm trying to trade larger positions. And most of the time when I trade TQQQ, I don't look for just one day, whether it's up or down. I really try to look for a pattern, or I try to look for, is there really some sort of transitioning happening in the market? I don't really need to trade before hours or after hours. It's actually fine to trade during regular market hours.
Someone has asked, do you look for signals on the TQQ or the TQQQ?
That's a great question. When I started, I looked at QQQ. Over the last 18 months, I realized for this class that I'm doing, I really went back and looked at what I actually do. What I realized is that I know the numbers for TQQQ much better than QQQ. I can tell you dates, I can tell you highs, I can tell you lows. I might be off by a day or two, but I know those numbers. Whether I'm traveling or doing whatever, it's very easy for me to look at my phone or watch and have some idea of, okay, are we getting extended? Like what's going on? So that's why I changed to looking at TQQQ. However, when I'm making a decision, particularly if I'm thinking that the overall market is turning, I will go back and look at NASDAQ and QQQQ for supporting. But when it's looking at extensions or gap downs and gap ups, and I'm trying to look to the left of the chart to see what's normal for TQQQ, I prefer to look at the TQQQ chart and not Qs.
Gotcha. Are you still holding any TQQQs right now?
Yes, I am.
Okay. Because there was a question, if you haven't sold, what would be your key? So what is your next key sell signal for the rest of your position?
Yes. The next key sell signal for me would be a close below the 50-day or the 10-week moving average. And again, not just one day. I would need to feel that this is actually a pattern. If it closes below the low of the day that it retook the 50-day, then to me, it's signaling that it's still trying to find a bottom. It could potentially go down to the 200-day. It hasn't been there in some time. I don't know if it will or not. But if it closes below that bar you were pointing to, then I would definitely sell more and wait and see what happens. Right now, it's trying to find support at the 50-day moving average. I don't think it's doing anything wrong, particularly for people that have already been selling on the way up and still have a profit cushion.
Do you consider today a break below the 50-day moving average?
Today is a break below the 50-day moving average, but I wouldn't sell here because I don't sell based on just one day of something. And if you look at a couple days before when it did close above, it's still holding above the low of that. Now, if I were still fully invested in TQQQ, then I would have definitely been selling after that 121.37. Before that 121.37 on 10/28, I'd already sold 50% of my position. And I entered on April 22nd at around $48. So I still have a profit cushion. And so I would and overall, I still think that the broader market is in an uptrend, even though we're having a bad few weeks. So I would wait for there to be close below that bar where you've got the arrow. To me, that would be an indication that we're still trying to find a bottom here from this recent pullback.
There's another question on positioning, sizing, and strategy. For your initial position, was it a single buy? Was it through multiple buys? How did you size into your TQQQ position?
So this year was a little bit strange because of the whole V shape. It was, as you said, because some of the news was not anything we could have anticipated. It wasn't really driven by the broader economy. It was being driven by tariff news and just things that you can't predict or anticipate. Typically, I don't enter my full position all at once. A lot of times when we have 3 days of higher highs and higher lows after that day one of a rally, that's when I'll initiate maybe a quarter position or a half position, and then I fill in with the rest of my position on the follow-through day. This year, because the rally day was where the $35 low, that day was up significantly. And then 2 days later, it was up again significantly on super high volume. I didn't feel like I could set a reasonable stop loss based on how much it had gone up. So I didn't initiate anything. By the time we got to 422, I had been looking from that 35 low onward. I was looking to see, is it going to test it? Is it going to test even like the low of that other day, like the day when it ended up going above the 10-day and the 50, the other big bar? Yes. So on April 22nd, even though it was a down day and it gapped down, the close was not bad and it still held above those prior two lows. So that's why on April 22nd, I made the decision to go in with my full position size, but my stop loss was going to be if it closed below the low of April 22nd. Most of the time, I won't get out all at once either. I generally will get out partially on a close below the follow-through day and partially on a close below the rally day. But in this case, because of that wide swing between the day one rally and April 22nd, I did get in with my full position size, but my stop loss was that I was going to get out of the whole thing if it closed below the low of that day.
Gotcha. Speaking about managing your portfolio and risk, there's been multiple questions in the chat saying you're mentioning extension from 21 day or 15 day, 50, 21 EMA, 50 standard moving average.
Yes.
Which one do you consider more ominous? Is it close below 50 or the 21? And what is considered extended?
Yes. So what's considered extended? This is where a little bit of the art comes in. You have to look at the left of the chart and see based on the lowest point of the trend we're in now, that would be 35. You have to look at when we start to see it pull back. For example, like that 96.32 when we had that downside reversal. How far extended was it above the 21 and the 50? So in this case, and here, like what you're clicking on, it's showing that it's based on the close, right? So it's showing that at a close of 94.86, that was 7.1% above the 21 EMA. But I'm actually looking for where the peak was, right? So I would be doing the math at 96.32, not necessarily the 94.86. How far? So you have to go back and look at that. Generally, over the last several years, when it is 10% extended above the 21 EMA and 20% extended above the 50 simple daily moving average, that tends to be when it starts to pull back soon after. It might not be exactly on that time, but that's when it starts to signal that it's extended, especially when you're seeing other things starting to pile up, like the bulls versus bears or downside reversals. So that is where I look for the extension. As I look to the left of the chart, if the left of the chart doesn't give me a lot, then I would go by 10% for 21 EMA and 20% for the 50 moving average.
The 10 and 20%, was it more based on past studies or of the art?
Yes, it was based on past studies. And sometimes when there's a choppy market, like in 2021, it can get even more extended than that. Over the last couple of years, I used to have a spreadsheet that I was tracking, but it became too cumbersome to maintain. I realized that if you train yourself to look at the chart, it starts to become obvious when it looks like it may be getting extended, and then you just do the math on the days when it looks like it's getting extended. The 10% and the 20% is based on looking at a couple of years and not just the most recent.
That 2021 chart that I'm putting on the screen right now, you look at 91.68 over here, and you pick off the high instead of the close, and you can get that 10, 20%.
Yeah.
There's a follow-up question to that. Do you buy intraday? Do you buy end of day?
Yes. So I'm really picky about my entries, and the times when I have not been picky about my entries, I'm open about when I do things wrong too, because I think people that just tell you everything they do right, they're probably not being 100% transparent. This year I had gotten out in December 16th, and I had been trying to find opportunities to get back into TQQQ for my shorter term positions throughout January. And I had agreed to do this TQQQ masterclass. And I knew that people aren't going to want to wait a year to figure out when to get in. People want more entries that happen. So I thought, okay, I'm going to experiment a little bit. A follow through day or my typical signals didn't happen, but it looked like it was holding above the 200-day. I got in on January 27th. Mike Webster had been talking about a follow-through day in spirit, even though it wasn't technically, and I had missed that. So I was like, okay, I'm getting in. And I set a stop loss that, okay, if it closes below the low of what I was looking at, which was 73.34, then that means my thesis is wrong and it's going to fit. If it closes below that, it's probably going to take a trip down below the 200-day, and then I'm going to get out. So I did get in on January 27th. And then if you look at February, I think it was probably February 27th. Where was that? So I think then, yeah, it was. So keep going to the right of the chart. It's where it goes below the 200-day moving average, the big bar a little bit to the left. Yeah, right there at 227. That was the day that I was forced to get out, because not only did it undercut my low of 73.34, but it closed below the 200-day moving average. The reason that I mention this is that I am generally picky about my entries, because when I'm not, things like this happen. With my entries, I really try to wait for the market to turn. So that's why for my trading, most of the time I try to wait till near the end of the day. It doesn't have to be the exact end of the day, but if you trade right at the beginning of the day, sometimes things change. For example, I think even today might have been a good example. It did end up closing below the 50-day moving average, But at some point during intraday, it looked like it might close like above the 50-day moving average. I prefer to wait for the end of the day to be able to validate that it really is, that trend really is valid and it's not just fluctuation.
This question came in a few days ago before what happened today. So I thought it was funny. If a market correction started today, which tickers would you be watching for early buy opportunities and why?
Okay. So I actually have nothing right now that I'm looking at. And I'll tell you why, because for individual stocks, I am very picky and I want strong fundamentals, but they also need to have very strong technicals. The screens that I look at are the IBD 50, IPO leaders, and sector leaders. For the IBD 50, I really first look at the top 15, which is the first page. When I looked at the first page of this week's paper, out of 15 stocks, there was literally only one, and I think that was Rambus, that is getting close to a buy point. So I'm not looking at the 250 or any of those other things. Of the top 15, 6 are extended. 3 have hit their profit targets of above 20%. 1 hit the 8-week hold rule. So 10 of the 15 are already either extended or near their profit targets. Of the remaining 5, 3 of them are testing their 10-week. When it's testing the 10-week, meaning it's pulled back to the 10-week, I usually don't use that as a place to enter. I use that as a place to hold. So a couple of my stocks, Robinhood and Palantir, are pulling back and getting close. But that to me is more of a hold. I wouldn't necessarily be initiating a position here. So the reason I don't have anything right now, if the market were in a correction today, what's on my early list? There isn't anything that's meeting both my fundamentals and my technicals right now. I would just be watching.
Thank you. So this is going to be poignant for next month because as the QQQs are a bunch of stocks put together. How do you manage your TQQ holdings around the quarterly rebalancing, especially the one that's happening in December? Does it create volatility? Does it create unpredictable action? What has been your experience?
Yeah, one of the things that I've realized with TQQQ is I've looked at it over the last couple of years, even though it's an ETF, I really think about it the way I think about individual stocks. Maybe not for my buy points or sell points. I have different rules for individual stocks versus TQQQ. When it comes to volatility, people have asked about the gap ups or gap downs. But if you have a IBD 50 style growth stock, many of them have gap ups and gap downs. Many of them are volatile. Bill O'Neill had said that the true market leaders can correct 2.5 times what the overall market is doing. TQQQ corrects maybe 3 times. I'm just prepared for that volatility, and I have kept that in the back of my mind for whatever position size I go in or whatever my buy and sell rules. Volatility can happen from rebalancing. Sometimes the volatility happens with the news, right? The news you talked about, whether it's tariffs or interest rates or the Fed say something or unemployment or whatever may be happening. Sometimes it's because the Magnificent Seven are reporting earnings and they have a more bigger impact when it comes to the gap ups and gap downs. So I just come to expect that volatility, and that's why I try to, when I'm selling on the way up most of the time, except for October 28th when it was after a few gap up days, the other days when I sold on the way up, it wasn't super volatile, but it was starting to give me a few of those indicators that, okay, I've had good gains. I want to start taking some into strength so that I'm able to withstand the volatility better.
TQQ is due to split on February 1st. Would this influence your trading in any way?
No.
So we're going to start going to the mistakes, lessons, and risk management section.
Okay.
So was there ever a moment when you set your stop too tight on a triple leverage ETF like the TQQQ, got shaken out, and later realized you should have given it more room? What happened?
Yeah, so I tend to have the opposite on TQQQ where I give it a lot more room. And part of the reason is because if you look at the average true range, the 21 average true range, which Mike Webster has done various webinars on, the most, when I looked at, for example, today's ATR, it's 4.6%. So if you have a very tight stop loss, you're going to get shaken out even if it's not really doing anything abnormal. I learned my lesson about tight stop losses with individual stocks. When I was looking at 7% to 8%, I would get shaken out and then it would turn around. I realized that I have to set more of a technical stop loss rather than a tight stop loss. It's just based on percentage. And that's why I tend to look at closes below key things, whether it is the follow through day, whether it is super extended, whatever. So I try to set my stop loss based more on technical indicators rather than something that's too tight based on percentage, just because of the volatility that's inherent in this product.
This is my own personal curiosity. On 422, the stop loss was extremely tight. It was maybe 5% on TQQQ. That was just a pure technical standpoint.
Yes, the reason for that is because Justin Nielsen and I have talked a lot about follow through days in general. Before Bill's book, he used to talk about if it undercuts the day one of the rally, closes below the low of the rally, then the rally is no longer valid and you have to start your count over again. In one of the conversations that Justin and I had, he mentioned that with some of the market school analysis they did, not every follow through day succeed. One of the things he mentioned is, I think maybe in some of the research or analysis they did, that when it does close below the low of the follow through day, sometimes that's an indicator that follow through day is not going to work. Just when Bill O'Neill said that when there's distribution that happens soon after a follow through day, chances are that follow through day may not work. So that was the reason. So again, my intention is not to set a stop loss that's too tight or too loose. It's really set a stop loss where from a technical perspective, it makes sense. Another place I could have looked would be if it closes below 422 low, but maybe go to the day before if it closes below the low of 421. But if you look at the low of 421, it was 40.24. If you go to 422 the next day, the 422, which is the follow through day.
Is it this one?
The follow through day. So I think the point I was trying to make is that if you like on 422, even if I tried to look to the left of the chart to see, is there another place where if it undercuts, I could set another stop loss so that I don't have to get all out, I would have to take much more than even a 10% loss. So I didn't feel comfortable with that, especially because I went in with my whole position. That's why I had a tighter stop loss that day.
This is going to be an uncomfortable question. So how much are you willing to lose of your portfolio before it's uncomfortable?
Yeah, so when you say how much am I willing to lose, are you talking about a loss or are you talking about a pullback that occurs during a base?
Let's say a fall through day happens and it's just a big bar. Let's say it's like a 6% day. Some 2% fall through days do happen. On the 2% fall through day, what happens if you go up a few days, then you start going down? And then once it goes down below the low of the fall through day, you might be down, let's say 10% by then because of the increased volatility of how the TQQ works.
That's a good question. Typically, I look at what percent that position is. Let's say I set a 10% stop loss. I don't want to lose more than 1.25% to at the most 2% of my overall capital. So I will back into my position size. In a situation where it does look like it's very volatile, I'm not going to set a wide stop loss because I don't want to lose more than 1.25% to at the most 2% on that any one trade. And when it's an individual stock, I limit it to 1.25%. For TQQQ, I let it go to up to 2% is because at the end of the day, it is an ETF. Yes, it's triple leverage, but it doesn't have the single stock risk. And because I do tend to be patient with it, generally I'm okay with it going down 2%. Most of the time that has not happened. There's very few points where I actually enter. Most of the time I really want to have that confidence level that it really has turned. Justin had asked me, if you look now closer to more recent days, when it overtook the 50-day moving average, when it went down to 84.25 and then it retook the 50-day moving average, or even something that happened a few days ago when it retook the 50-day moving average. I don't get in after just one day because I want there to be enough warning signs that I'm wrong. I want to be able to see indications that I was wrong before that happens. Does that make sense?
That does, because one of your portfolio management rules, it's 1.25 to 2% of your capital. So you're seeing how your position size will affect your portfolio capital. It changes things. It's not an easy 5%, I'm done. It changes over time.
Exactly. Just to go back to the period we were looking at, you mentioned that April 22nd, it was a pretty tight stop loss if it closed below the low of that day. That's why I felt confident going in with my full position. If that follow through day had looked something like those few days before when we had a 35% increase in one day, there's no way I would have felt comfortable. In fact, if that day had happened and that was the follow through day, I would not have even gotten in that day. I would have waited until the next day to see what happens. You don't have to get in at the bottom. You don't have to even get in a few days from the bottom. I like to get in as close to that as possible because of the length of time I want to hold and because I do also use this as a source of funds. You could have gotten in a week after and it would have still been okay. If it is very volatile and there's not a good place to set a technical stop loss that doesn't require you to put a lot at risk, I would just wait. There's always going to be another opportunity.
Amazing. So the next question. I know you mentioned that you don't, it's full time, you are retired, and you do spending time with your family. So what happens when you go out, spend time with your family, and one of those follow through days hits? How do you enter in then?
Then I go in the next day.
Are you trading during your family vacation?
I do trade during my family vacation if the market is turning, but sometimes a follow through day may happen and I'm not even on vacation, but I'm just out. I do try to reserve from 3 to 4 most days to monitor the markets. I avoid having appointments then, or try to be where I can either look at my computer or at least that I can look at my phone and do trading when I'm traveling between 3 and 4, whatever the 3 to 4 Eastern time, whatever local time that could be different. I do try to keep an eye on what's going on. I do that more when it looks like the market may be turning. If we're just following the regular trend, then I wait for a few days before making a decision anyway, so I can look at it at the end of the day. It doesn't have to be between 3 and 4. But I do monitor even when I'm traveling. That's why I've moved to having more concentrated positions in TQQQ and less concentrated positions in individual stocks, because I don't have to worry about earnings. I don't have to worry about a huge news-driven gap down. Yes, 10% feels bad on TQQQ, but NVIDIA's had 17%. I remember Herbalife many years ago where it fell 40% in a day because of like a short sale window for it. So those things happen. So because of the time I spend not sitting in front of the screen, I do try to limit the number of things that I'm actually looking at on a day-to-day basis.
I missed the question on the recent trades and signals. This is asked, I'm pretty sure, by Floyd. How do you evaluate volume on TQQ when making buy or sell decisions?
Yeah, that's a good one. I do still look at volume. I feel like the price action is more important. In terms of volume, when you see on the market surge charts, like when they actually mention something about the volume, because it's like the biggest volume in weeks or months, I give a little bit more weight to that. It's just one of the things that I look at, but I do put more weight on the price, and I do put more weight on what that price bar looks like. So like I said, if it's a downside reversal, if it's gaps up or gaps down, is that something that I was expecting? How far extended is the peak of that bar from those moving averages I talked about? I do pay attention to volume more when it comes to figuring out the follow through day, but I don't look at TQQQ. That I'm looking at NASDAQ or S&P 500. That because, as you were mentioning earlier, when IBD does the update, it's typically like 6 p.m. Eastern time, so it's after the market closes. I've been looking at the technicals enough and I followed Bill's work closely enough that usually by 3 or 3:30 Eastern time, you have a sense of, okay, is it going to close at the bottom or the top or the middle of the range? Usually I have enough to make that determination. I do look at volume when I'm trying to determine if a follow through day has happened. But otherwise, I pay less attention to it than I used to before.
I do want to do a time check. We're about 10 minutes off the top of the hour. I've been asking Vibha a lot of the email questions. Does anyone here want to unmute themselves and ask in their own voice any questions that's burning inside their hearts? So feel free to unmute. Calling once, calling twice.
Hey, Kelly, I had one question.
Yes.
Hi, Vibha. Thanks for the presentation. I had one question. Do you do any hedges on market tops or to preserve your profits?
I'm sorry, can you repeat your question?
Do you buy any hedges to preserve your profits?
I don't. That is something that I want to look into more so with individual stocks, I think. As I had mentioned, I've been holding NVIDIA for a really long time and I've had to sit through some pullbacks. My dollar cost average is under $1. It's 70 or 80 cents. I still believe in the company. So I am going to learn about that and look into that. But currently I don't use any hedges. I tend to just sell parts of my position and raise cash.
To follow on the hedging, Aaron, I was going to ask you a question.
Viva, thank you for this presentation. I have a question for you. Do you take in consideration the weekly charts for your trading decisions?
Yes, I do. I love weekly charts. And that's why I mentioned earlier that even with TQQQ, I treat it as a position trade, not just a shorter term trade, because when we have the volatility, when we have those gaps, I always go to the weekly chart because I want to put it in context. And even if you look at what's happened over the last 10 days, if you look at the weekly chart, it actually doesn't look that bad. Yes, it's pulling back. It could be basing, but it's still holding above the key averages. So I love weekly charts, and I think that is one way to put things in perspective when there is a lot of volatility or gaps.
Thank you.
Calling for questions.
Excellent presentation. Are there any other technical that you use or maybe summarize what you talked about? Hot technicals.
Yeah, I'm still in the process of refining my indicators because my goal is to keep things as simple as possible for a few reasons. One is that because this is purely technical, there's no fundamentals involved here. There's so many different technical indicators, and a lot of times they conflict with each other. So I'm really trying to look at, based on where I've had success, what are the ones that really had the greatest impact, teach other people what I do. I want to try to bring it down to its most impactful level and not just all the little things. So at this point, I'm still refining the biggest ones out of all the analysis I've done and where I've had the most success. I feel like paying attention to 2 closes below the 21 EMA is a good defense, and paying attention to when it starts to get very extended above the 50-day and the 21 EMA again as a benchmark. Maybe look at 10% for the 21 extension and 19 to 20% for the 50-day extension. Those to me are the indicators where if I've followed those, I tend to capture most of the gains without giving that much back.
When is the masterclass scheduled at the time? Do you know?
Yeah, it has not been scheduled yet. My target is to do it during early spring, like first quarter of 2026. The reason for that is because when I've gone back and looked many years, a lot of times from end of February to sometimes mid-April, there tends to be like not necessarily V-shaped like we had during COVID and even this past year, but there tends to be like volatility or pullbacks or whatever. So I want to do it at a time that's relevant, but I am working with a trader line on this. I'm creating the content, but they're going to do the recordings and then they have to do all the whatever the legal stuff and all the disclaimers and whatnot. I think they said that they're going to put like a waiting list on their site. So if people want to register for the waiting list, they'll be kept informed of when it's going to happen. My target right now is that it would probably be in March of 2026. There will be 2 webinars. The first one will be more of the science and the black and white indicators, for lack of a better term, and then probably follow up with a second one a few weeks after that's more based on the art and the nuances, because I feel like first you have to understand the ones that are easier to define before starting to get into the nuances.
A follow up to that. Rick Berry asked, where can we sign up?
So Richard said he was going to follow up with you, Haley, once I find out. Richard was going to put something on a Trader Lion. But in the meantime, I'm available. People can find me on LinkedIn. You can reach out to me on LinkedIn. And a number of people have done that already. I'm just keeping track of their names. And then once he does put it on Trader Lion, I'll just send out a message on LinkedIn. And the reason I use LinkedIn rather than X, sometimes with X, there's just so much information that it's information overload. And for me, the other reason that I use LinkedIn is because I'm able to see a little bit about the person who's reaching out to me, because I've gotten some weird messages from people before. And so at least on LinkedIn, it gives me a little bit more of a comfort level that it's a real person or that it's somebody whose real intention is to learn and they're not being random about things.
A question popped up in my brain today. You're a 2-time U.S. investing championship. Have you been getting more spam, email, random phone calls from just like people out of the blue because of you winning the US.
I do that. And in fact, my husband doesn't like that at all because it is a concern. Like, there were 2 fake accounts on X that pretended to be me. They very slight variation between my actual handle and their handle. And I hardly use X, like I said, because I feel like there's so much information overload. I had to report them and then that got removed. I have gotten propositioned by people before on it. It's just weird stuff. Yeah, it is. And I am a private person. The only reason I really entered the US Investing Championship was because instead of going back to a corporate career, I thought I want to manage money and I need to have a track record, have a great track record as a corporate executive. I didn't have any kind of public track record. And in the Investing Championship, they do double check all the numbers and Norm publishes everything. And so that was my original intention. Once I realized that, no, I don't want to do that anymore. That's why I'm not competing anymore. I definitely want to help people, but I do care about my privacy also.
Yes.
So I'm cautious about that. That's why I don't put a lot of stuff out on social media.
Yeah. When I was writing your descriptor to describe you, that thought came up in my brain. I'm like, I feel like you're very down to earth and not competitive. And you did it for one reason, but it's like, I would like after. Because sometimes when you're in the public view, I'm scared of too much public.
Yeah, it is. And we've had like my son, his credit cards got hacked. I don't think it had anything to do with me. These days, everybody uses their phone for everything. And sometimes people just hack you or whatever. People that are close to me know this. I don't really talk about this with a lot of people except for other investors because I do want to share. Originally, I was trying to do more one-on-one emails or conversations, but the number of people that have reached out has just mushroomed so much. And I really do want to help. And I did realize that a lot of times when people have questions, it's because they're listening to one thing I said, which again, depending on the context of when I said it or what the rest of the conversation was, it can be confusing. And this is risky. And so I was really happy when Traderline reached out to me because I would like to be able to go from start to finish and use a lot of examples. And they want me to really do like a bar by bar analysis with pulling all the pieces together. Okay, this is what I was seeing. This is what I was feeling. Okay, I did this here, but it was because of this other, it was my daughter's birthday and I didn't want to be sitting in front of the market, not because there was any other, but really to go into like real life.
So we're at the top of the hour now. So Vibha, thank you very much for taking your time. Thank you for all the last minute things I've sent you, questions, emails, and stuff like that. We've been planning this for about, I feel 3 months now to make sure things are okay. So I really appreciate your patience and effort, and it's great to finally meet you instead of going through emails. So thank you for your time. And everyone, thank you for your attendance. Look out for the video. This will all be recorded. I'll upload to YouTube. There's no guest speaker for the next one. It's at December 11th on the second Thursday of every single month. So reach out. We're both available. We're both pretty much wanting to talk. And I'll end with this. When she bought on 422 and sold on 1028, can you guess the amount of gain on that position? It's over 250. Very nicely done. You beat every single chart I've shown today. So that's simply amazing and just a testament to how you are as a student. So props to you, Vibha.
Thank you.
Okay. Have a great night, everyone. See you next time.